Greetings, everybody that are joining our webinar. Welcome to the PPP Loan Follow-Up and Forgiveness webinar. It's brought to you by the collaborative of the SCFD, the Colorado Office of Film, Television, and Media, and the Colorado Business Community for the Arts. My name is Dominic Dezzutti. I'm the station manager at PBS 12, and I'm very happy and proud to be your moderator for this webinar today. It's clearly hopefully for folks, a once-in-a-lifetime era that we're living through right now. With a great opportunity with this PPP loan program, but so many questions. And gratefully, we have some wonderful experts with us today to answer your questions. So we already have a few of them ready to go, but please know this webinar is all about you. So there is a way for you to get involved, ask the questions you have. You might hear it answered because we've heard from already heard from some folks, but we are very excited to get this information out to you. So without any further ado, let me introduce our panelists. They can tell you a little bit about themselves, and we'll get a little bit of introduction about what's going on currently and kind of set the table of what's happening and really things changing day by day in a very fluid but important atmosphere. Let me first introduce Deborah Bayles. Deborah Bayles is a partner at Stinson, and we'll also have Justin Simpson, who is the Community Banking Division Leader at Vectra Bank, Colorado. Deborah, why don't you start us off with a little bit about you and some of the key things that kind of set the table for what we'll be talking about today.
Sure. Thanks, Dominic. Appreciate it. So first of all, I have to give my lawyer disclaimer that this is not legal advice. This is really just an opportunity to give you some of our perspective on things that we're seeing with regard to the PPP program. We always encourage folks to talk to their legal counsel if they have specific questions about their own particular situation. The other disclaimer I'm going to give is that we were expecting guidance from the Fed and from the SBA with regard to the forgiveness program. We were expecting it 2 weeks ago. We didn't get it. We finally did get the application, but we still don't have the guidance. So a lot of what you're going to hear Justin and myself talking about is sort of our guess as to what that guidance might be at some point in time in the future. We're really hoping it's coming out any day now, but there's still a lot of unanswered questions. So try not to be too frustrated with us if we hedge our questions and our answers as we go through the process. As Dominic said, I'm an attorney with the Simpson law firm here in Denver, and represent a lot of banks as well as small businesses. So we've been dealing with PPP issues on both the lender side and on the borrower side over the last couple of months. A couple things I just wanted to point out that we've learned that are fairly new from the application that just came out. One has to do with timing, and I think this is probably really important for most folks. The covered period, and that's a defined term that you're going to hear talked about a lot, starts for each individual borrower as of the time that you actually received the funds. So when that money hit your bank account, that is the day that your covered period starts. There are a few nuances to that, but if you consider that your start date and count 8 weeks from that date, that is your covered period. And the money that you spend during that covered period is the money that will be forgiven if it meets certain criteria. The other important deadline to be aware of is that you have 6 months from the end of your, 90 days from the end of your covered period to submit your application for forgiveness. So it's not right at the end of your covered period, but it's within 90 days of the end of your covered period. So that's another date you're going to want to make sure that you are keeping track of. As far as payments on your PPP loans, you've got 6 months of no payments at all. And that's 6 months from the date, again, that you received the monies. And then after that 6-month period, any amounts that have not been forgiven will be paid back over an 18-month period. So the total amount that hasn't been forgiven will be amortized over 18 months. Interest is accruing on those funds from the day you received the funds at 1% per annum. So just kind of, again, keep those things in mind. What counts as cash compensation is something that we have had a lot of questions about. There's still some questions out there, but one of the things they did clarify in the application is that payroll, cash compensation paid to employees during your covered period, actually paid to your employees during the covered period will be included in the forgiveness amount. Also, payroll costs incurred during the covered period, but not paid, but paid in the next payroll period will also be covered. So for example, if you've got some deferred compensation, you actually pay that deferred compensation during the covered period, you can include that in your forgiveness application. If you've got employees that have worked all the way through your covered period, so that those wages have been incurred, but they've not yet been paid because your payroll period hasn't happened yet, you can include those incurred payroll expenses as well. A couple of things with regard to employees who you had previous to the COVID-19 situation, and then also employees that you may have gained during that period of time. The application, again, there's some nuances to it, but it makes it very clear that you do not have to count any employee who has rejected a bona fide offer from your company. So if you asked an employee to come back and they said, yeah, no, thanks, I've got another job or something else, you don't have to include that employee. Also, if you've fired an employee for cause, meaning they did something wrong and you fired them as a result of that. If the employee voluntarily resigned, not because you furloughed them or not because they were laid off, but they voluntarily resigned their position. And also if the employee voluntarily reduced their hours, again, not as a result of something they were asked to do, but voluntarily did that. Those are some exclusions from your calculation of how many employees you have. And the reason why that's important is because the total amount of your forgiveness is going to be dependent on several things, but one of them is that you have to be able to demonstrate that you have the same number of employees at the end of the period as you did before the layoffs and those kinds of things started. So February 15th is kind of the magic date in all of these legislation. So whatever your full-time equivalent headcount was as of February 15th, if you reduced that between February 15th and April 27th, you have until June 30th to bring those employees back on. And as long as your headcount is the same as of those two periods, then you sort of meet one of the safe harbors, and that gives you the ability to get forgiveness. There's much more detail in those applications. I believe you guys have all received a link to where you can find the application and the instructions and those kinds of things. Those are just a few of the highlights that we sort of picked out as a result of our having reviewed the application over the last couple of days. So wanted to bring those to your attention. But I'll stop talking now and let Justin give you his perspective, and then be happy to answer any questions.
Deborah, thank you very much. It's going to be clear for all of our webinar attendees watching live or watching this recorded later. They're getting a lot of great information today, so thank you for being a part of this. Justin Simpson from Vectra Bank, Colorado, why don't you give us a little bit of the background, your background, and then also setting that table for us as we're looking at the situation currently.
Thank you, Dominic, and good afternoon, everybody. Justin Simpson with Vectra Bank. I've been with the bank about 10 years. My position involves running business banking and business development for the state of Colorado. So I've spent a lot of time over the last 2 months helping thousands of businesses facilitate their ability to get financing underneath this PPP program. And in addition, I'll be heading up for the SCorpCCorp our efforts on processing the forgiveness application. So I've been very, very involved with businesses and working through this. As you heard from Deborah, a lot of things change. A lot of things change on a weekly basis. There's a lot to know about the program. And if there's one thing we can really give you today, it's where to find the information. Whether you're the bank, whether you're a CPA, whether you're a business owner, whether you're an attorney, we're all getting the same information from the same source. And while about 80% of it is pretty straightforward, there is about 20% that is open for interpretation. And so what we're trying to do today is provide you with access to find the information. If we get into some very specific questions about businesses, we may be looking to defer those either to your financial advisor, your CPA, or an attorney that maybe be able to help guide you better than what the bank can do. But ultimately, we thought if we give you the access to the information, we can review some of the definitions, some of the terms, the generalities on how those apply, and it should give you a pretty good idea of what you're looking for. When the SBA did release its application on Friday, they did a very good job this go-round of giving some definitions, as Deborah talked about, on your covered period, on some dates that you really need to be aware of, as well as the documentation that's going to be required for you to submit as part of your forgiveness. So what we're hoping today is if you gain access to that information, you can start to collect those documents, you can know what you need to review, prepare, and be ready when the time comes for you to submit your forgiveness application. So with that, Dominic, do you want to turn it back over and start talking about the program?
I think it's a great idea, Justin. What we're going to do is basically start opening up to questions. Like I said before, we received quite a few already, so we're going through those. But please don't hesitate to get your own questions in here. We have access, so we're going for about a full hour today. So we're hoping to answer as many questions as we possibly can. So let me get to this first one. In figuring our head count using the date range of 1/1/19 to 3/31/20 for the PPP loan, we had 2 employees who voluntarily left the company. One left in 2019 and the other prior to the pandemic in 2020. We had not planned on replacing either of these positions, either before the pandemic or after. So can we eliminate them from the total headcount? Who would like to take that one on first? Deborah? Oh, wait, you know what?
Sure.
Looks like we're sharing the screen. Go ahead.
Go ahead. Justin, did you want to cover that, or do you want me to take a stab at it?
So I was just going to jump in here, and I'm going to share my screen. And some of the things that we're going to share here is the application that was posted on the website for the SBA. We did send out a link. So if you went out to the Treasury website, what you'll find is all of the documents that are pertaining to this program, you can find out there. And what we're referencing today specifically is the loan forgiveness application. One of the things you'll note when you go out to the site is they do date stamp every time there's a change to a document. So if you look at the most recent update, it was actually as of yesterday in the frequently asked questions. So if you keep an eye out on this website, oftentimes check it daily, because as questions are raised by businesses and by banks to the SBA, when they do define questions, they do post the answer for those for everybody to see. So as we go out and we look at the application, this really talks about what Deborah was talking about in terms of the FTE in that calculation. So if you're looking to calculate your head count, you'll find this section here that talks about the average FTE, and this is on page 7 of the application. Moving forward with that, there is a calculator that follows behind. And so really what you're trying to do is figure out what was your FTE on February 15th. That's your starting date. And that's what you're going to be measured on for maintaining employees. And then the second thing that you're going to be looking at is what was your head count or FTE count on June 30th. In a perfect world, if your counts were the same or greater from February 15th to June 30th, then you're going to have a very easy time calculating it. If you're a business that's had some change in the number of employees that you've had, either through attrition, whether you had to furlough or lay individuals off, whether they chose to resign and leave on their own, or if you reduce the hours of some employees, then you're going to have to go through and complete the calculation. So you will find the calculation right behind the instructions for your workers. And what they're going to ask you to do is complete a table similar to this one, where you put your employee's name, any type of employee identifier, their cash compensation, and then their average FTE is measured on a 40-hour week. So a 40-hour week would be a 1 FTE. A 20-hour employee would be a 0.5 FTE. You can figure out anything in between. What you're then going to do is you calculate on your February 15th, and then again on June 30th, and that will help you understand what your eligibility is going to be. This form then feeds back into page 5 of the application. And so it's going to be very similar to doing your taxes, which is why we do recommend that a lot of businesses that have some confusion reach out to their CPA through this process, because they are set up to help One of the things that we did receive today was a calculator from the American Institute of Certified Public Accountants. And so after this meeting, Kelly will send that out to everybody as a resource that you can play with that'll help you make these calculations. Deborah, is there anything that you would add to that?
No, that was a great explanation. Again, just to be clear, later on down in that application, it does give you the ability to exclude certain types of employees. So if I can recall the question, I believe you indicated that there were 2 employees who voluntarily left. I can't remember if it was before or after that February 15th date, but if one of them left between February 15th and April 27th, I think it is.
They were both before the pandemic.
If they were both before the pandemic, then you don't count them. It's whatever your head count was as of February 15th of 2020. And as Justin said, you know, you kind of look at that and you look at where you are as of June 30, and hopefully it's the same or greater. And if it's not, then you have to go through the calculation, and then you also go through the exclusions to determine whether or not. And Justin's got the paragraph up there right now that says FTE reduction safe harbor, that language, and then right above it, the FTE reduction exceptions. You'll want to kind of check those 2 areas to see whether or not either of those apply to your situation.
Perfect. Well, let's get to our next question. What are the consequences if we are short hiring back 1 to 2 employees by the time the loan is due? We will recall or replace these positions, but do not have a need as of yet. Who would like to take this first one? This second one, rather.
So I think one of the keys to that is when you hire them back. And according to the application, and this is confirmed in at least the guidance we've seen so far, as long as that position has been replaced or filled by June 30th, you're good. You can count that person. So you can hire them back June 29th, and that will count for that safe harbor. If it turns out that you do not have the same number of employees that you had as of from February 15th to June 30th, then this calculator will help you determine what that percentage reduction is, and that will impact your ability to get full forgiveness. The concept behind this is that you received your loan based upon what your payroll was in the previous year. The loan amount was calculated at 2.5 times your average payroll. So if your payroll during the period of time for forgiveness is less, and your number of employees that you've hired is less, then they're making an adjustment to the amount that you can get forgiven. That's just sort of the high level reasoning behind it. But the calculator in the worksheet will walk you through that process and will get you to whatever that reduction percentage is. But there will be a percentage reduction to the amount of payroll that you can get forgiven if you don't have the same number of employees by June 30.
Great. Justin, anything to add? Should we move on?
Just to add to that, one of the important things to remember is the goal of this program was to pay employees for this time period where we're really kind of in this stay at home, not all businesses are open, not all businesses are working, and then to provide that little extra, that 0.5 of the 2.5 calculation to help the business owner cover some of those other expenses such as mortgage and rent and utilities. So if you are late in hiring back an employee, as Deborah said, it's likely that your payroll is not going to be at the same level as it was last year. And if that's the case, then as your payroll is lower, the 25% that you're allowed to use for non-payroll expenses is also lowered, and it's likely to leave you with a dollar amount that will not be forgiven. So if you want to follow the act as it was intended, the goal is to fill those positions as quickly as possible, to keep people employed, to have them continue to earn a paycheck. And if you do that and you do it well, then we will support our economy, keep people working, keep them receiving paychecks, and you'll be in a position where your loan will be forgiven.
Well, perfect. Let's move on to our next question. Are employee bonuses eligible toward the PPP totals as wages? Who wants to start this one?
I can take that question. When the definition is published, and if I'll go to page 1 of the application where it talks about wages, or it might be on page 2. All payroll costs, including wages, salaries, tips, and bonuses, are included. So anything that's accrued during that 8-week period would be eligible, because what you're going to report is your total payroll number. There is nothing in the statute that requires you to break out whether it was salary, hourly, bonus, commission, or any other source. The only thing that you need to be cognizant of is there is a cap, and that is of $100,000 in cash compensation. And if you figure that over the 8 weeks, that's $15,385. So that's the only cap on an individual basis that you'd want to be aware of. Deborah, anything you'd add?
No, that was a great explanation. I was going to point out the cap as well. That is an important limitation to be aware of as you're thinking about paying bonuses.
Well, perfect. Let's move on. If you hire someone and then after the 8 weeks don't have enough business to keep them and they go back on unemployment, what is the penalty?
So as it stands right now, what we know is that you're going to count your employees on February 15th and then again on June 30th. That is at the point at which you submit the application for forgiveness that you're tracking through. There is nothing in the statute that says if your business changes after that point in time that would require anything to be done. Deborah, have you heard anything else about that?
No, I was going to say that's exactly the impression that we had received from everything we've read with regard to the guidance that we've received so far is it's very static, and it's quite possible. So there are some bills in Congress right now. You may have heard of the HEROES Act that have talked about extending some of these deadlines, extending the 8-week period to 12 weeks, changing some of the other deadlines. So while currently it does say June 30th, it is possible that that date may change at some point. But right now, for what we know and the guidance we've received so far, there is no clawback if those employees do not remain employed after that period.
Okay. So our next question is quite thoughtful and a little lengthy. So bear with me as we work through this one. I'm an auditor and work only with nonprofit organizations. Most, if not all, of my clients have received PPP loans. A significant amount of these nonprofits receive government grant funding, through which salaries for certain employees are sometimes reimbursed. A question I have been getting from many of these clients is whether the PPP funding can be applied and forgiveness requested for those salaries that are being reimbursed through these government grants. Initially, when we were questioning when the PPP loans would be subject to a single audit, our answer was no, because this act of double dipping is not allowed under the uniform guidance. However, the AICPA's Government Audit Quality Center and SBA recently released that the PPP funding would not be subject to a single audit. Therefore, we are now unsure as to whether this is allowed, and if it is disallowed, what authoritative guidance would cause this to be disallowed? Deborah, I'll look to you first, or if this is something that just wants to jump in, but whoever wants to jump in this lengthy question, I'm happy to reread any part of that.
Sure, I think I get the gist, which is basically, you know, and this applies not just to government grants, but it also applies to if you've got an existing SBA loan where there's interest accruing on government loans, those kinds of things. The guidance has been vague to date, but what we have seen certainly indicates that if there is some other government benefit that you're receiving, this applies also to things like unemployment insurance and other benefits that businesses may have received under other acts that may have happened in conjunction with the CARES Act, that you can't double dip. You can't count those kinds of things. There is no specific guidance that I have read that addresses that question specifically, but it would not surprise me as additional guidance comes out if they do address that question, that the answer would be as you suspect, which is if you're not incurring those costs, meaning yes, you're paying those individuals, but those individuals are really being paid through those grant proceeds that are coming from whatever governmental organization, that really doesn't count as payroll because it's not really an expense that's being incurred by the individual business. In answer to your question regarding the audit, it is unclear. We do not have specific guidance on if and when the SBA may or may not be auditing these loans. We did get some clarity that really anything over $2 million is going to get a lot more scrutiny than loans under $2 million. But we don't have anything that specifically says there won't be an audit on loans under $2 million. We don't have anything specifically that says what they may or may not look at, and we don't know the time period in which these audits might come. It might come before the forgiveness is determined. It might come 2 years after. We just have no idea. So, you know, the advice that I tend to give more often than not is be conservative. If you have other things you can expend those costs on, which are forgivable, go that direction. If what you normally pay employees is what you're paying them during the forgiveness period, great. Just be conservative with what you're claiming expenses are through that period. And if there is no guidance and ultimately you decide to add it to your forgiveness application and it gets denied, then the result is that you just have a larger piece that you have to pay off. And again, it could also be determined during an audit period, either before or after the forgiveness, that certain costs were not, should not have been forgiven, in which case, again, what they're going to do is come back to you and ask you to pay it off. And there may be some interest and there may be some penalties or fees or something associated with that. We don't know. We have not gotten any specific guidance about any of those things either. So I wish I had something more specific to tell you, but I agree with your assessment about the double dipping sort of being an overarching goal of the program, but that no specific guidance on that issue has been given.
Yeah, when it comes to how we look at it from a financial institution perspective, I think there's two questions that come up. It's can we and should we? And as you do see with some programs like the EIDL program, the EIDL, they do give specific guidance that you cannot use more than one government program for the same purpose. So oftentimes what we'd advise is look at the programs that are available, take advantage of the program that makes the most sense for your business or your organization, and use it for that purpose. And if you have the opportunity to take advantage of more than one grant, more than one program, use them for different purposes or different periods of time, that's the best thing to do. When you think about the submission of your forgiveness application, keep in mind that the way the SBA set this up is us as the bank are not doing a very deep, thorough underwrite of your application. What we've been asked to do is accept the borrower's certification, the business's certification, for about 95% of what's contained, and really just do a very quick review to ensure that the documentation they provided meets the statute, but not necessarily to do a thorough review of that documentation, but to really rely that the business understands the program, did their own research, met with any advisor that they needed to understand what they should be submitting, and then is certifying that they have reviewed and submitted their application correctly. So if this comes through from a bank perspective and you've provided the documentation that's been required, it's highly unlikely that we would flag it or do anything with it, especially given that we don't know other programs you might be involved in. Where these things will potentially come up is if on the back end any type of audit is done by one or more organizations, they may look at all of the programs that you've taken advantage of and then make a determination there in an audit. So I think it really comes down to can you or should you, and we really leave that up to the business owner to figure out what's best for their business or their organization.
Just I think it's a wise question. Probably a lot of folks that they're asking, can we and should we? Always good questions to ask and make sense here. Let's get to our next question. I think, especially the timing of the year, this is probably in the minds of a lot of folks. We have seasonal employees that we have not paid using the PPP loan because they stopped working for us in March when our program shut down. They were included on the employee count on our application, though, because we used them and paid them for all of 2019. How do seasonal employees factor into the forgiveness aspect? Who would like this one?
I am opening up a document now that is in
Okay.
the Treasury website that is specific to seasonal employers. And so what I'd really encourage this person to do is come out and review the guidance that was given on seasonal employers. Because what they did is they did allow you to change the time period and pick any 12-week time period in order to make your determination. And it was specifically done for those seasonal businesses that are more summer, right? You think about landscaping companies being a big one where, they were not necessarily had employees in, January through June of 19, which was the initial seasonal guidance, or they were just getting ramped up, or even in January, February of 2020. So they do give some guidance on picking that 12-week period. If you've already filed your application and received your loan funds, you do have the ability to go back and revise that loan with the new calculation. We've actually done several of those just this week for businesses that have determined a different 12-week period that they want to measure their eligibility for the loan, and then subsequently what the forgiveness is going to look like. So it does definitely give a great opportunity, and the business owner can really look at where their greatest need was through that 12-week period to determine what they can qualify for on the highest end. The important thing to note is if you're going to revise your loan amount that you've already received, that deadline to get it done is prior to a bank filing its 1502 report. Some banks have started filing those already. Once we as the bank file a 1502, which is where we send your loan to the SBA, we're no longer allowed to make changes. The SBA did come out yesterday and extend the deadline by which banks are able to file from May 22nd to May 29th. So that means there's a high likelihood that your loan has not been filed yet. But that is a question you'll need to ask the financial institution that you worked with. And so that would be the first start. Then the second thing that you'll see in the application is it also does talk about what you can do to make the adjustment when it comes to seasonal for the forgiveness. So after you've made that adjustment, let me just find that section here in the application. Then you can review that and figure out what that would do for your forgiveness. Deborah, anything you'd add to that?
No, I was just going to say, that is one of the areas that they did cover in the application, but not in any specific detail. And we would expect some more specific guidance on seasonal, how seasonal folks should be measuring and submitting their forgiveness applications, because that's when we started the program and the initial guidance that came out was, hey, for 80% of the people, this is the way it's going to be. And then we started getting sort of the exceptions, and one of those being seasonal employers. And I would expect the same thing to come out on the forgiveness side. This is the what fits for 80% of the people, and then the specific guidance for folks who don't fit in sort of the normal employer profile will come out later. So again, that's one of those things that I would expect some additional guidance on, because they have given us pretty specific guidance on the application side on how to apply for those funds. So they're going to have to provide additional guidance on the forgiveness side, because most seasonal employers will not, the number of employees on certain dates are not going to match, your run-of-the-mill employer that employs people year-round. So stay tuned. Again, that's one of those that we just don't have an answer to yet.
Makes sense. Appreciate both your input on that one. Let's get to our next question. We have, well, before I get to that, I wanted to make sure that all of you knew that as you're watching the webinar, whether it's live or our tape version, we are sending out the link to the Treasury Seasonal Employee Guidance, and that is along with the calculator. So all these different great resources that are mentioned by our experts here in this webinar are being provided. So thank you for checking those out, and we're happy to be able to provide that. Let's get to our next question. We have several hourly folks that have continued to pay using PPP funds. They are not full-time, however, we included them in our employee count on the application. Please explain how full-time equivalents will factor into the forgiveness. We have continued to pay our full-time staff using PPP. Who would like the first shot at this one?
So as Justin's scrolling through the application, you can see, and if you go to the page that has the charts on it, as well as the part that he just highlighted there, the full-time equivalent, there's two different ways you can calculate that. You can either use the simplified method, which is anybody that's 40 hours or more gets a 1, anybody who's 39 hours or less gets a 0.5, and you calculate what your full-time equivalent was as of February 15th, and then as again of the June 30. That's sort of the simplified method. The other way to do it is again to take the actual hours up to 40 that people are working and do an average. And if you do the average, sometimes people come out better with the simplified method. Sometimes they come out better with the averaging method, depending upon how many employees they have and whether their part-time employees are really half-time or not. So we'll want to kind of do that calculation both ways to determine which way is more beneficial for you. And then once you determine that, then you put those numbers in the chart to determine what your total full-time equivalent workforce was as of February 15th, and then do the same calculation again as of June 30.
You know, one of the key things to really be aware of when you're dealing with part-time employees is you are going to be asked as part of your calculation to look at what their wages were last year and what they are today. And if they have a decrease of more than 25%, it will require you to report that. So it might be something, if you've got part-time employees, that you really want to monitor closely on a per employee basis to verify they're either getting as many hours or close to it, or they don't have greater than a 25% reduction, or if you've somehow reduced hourly wages at all, there's not greater than a 25% impact if you're looking to maximize your loan forgiveness opportunity. And that calculation is fully included in the calculator. This is the section here that talks about that reduction of more than 25%. As you're doing your calculation in your table, that's where you'll make the adjustment down here on the front page if there is a difference of more than 25% on a per hourly employee basis.
Wonderful. These are great answers. Again, I want to thank our experts, Deborah and Justin, who are being part of this webinar. As a reminder for folks, you can submit your questions. We're going to try to get as many as we possibly can answered, and let's continue that same process. Our next question. I think utilities can be factored into the 25% of the loan we can use towards rent. Please define utilities. Does it include the company we pay to host our website?
Well, that's a very interesting question. So the definition as it sits out here on the website is you've got your coverage mortgage obligations, which does include other debts that were incurred prior to February 15th. It does include utilities, and what they've got listed here is electricity, gas, water, transportation, telephone, or internet access. I would classify paying a company to host your website as part of the internet access. And so if I were filling this out for myself, I would say yes. We've seen some other guidance, when you think about transportation and gas, the question would be if you have company vehicles, is the gas incurred on those eligible? That's one of those gray areas. I've seen some organizations that have said, yes, that would be acceptable, that would be included. And I think the biggest thing to look at is if it's an expense that's a utility related, as in this definition, I think you're probably likely to be able to include it. Deborah, would you have any additional guidance on that you'd offer?
I totally agree with you that some of these things are very nuanced. And, the one thing I would just recommend with regard to your website host is, a lot of times there are different components to that service. There's the hosting component, and then there's services that are also provided, and there's, security services and those kinds of things. you definitely would not be able to include any sort of service component in that calculation. It really is meant to cover the utility itself, the provision of the utility itself. So just be careful when you're looking at seeking reimbursement for third-party services like that, because those hosting contracts tend to include a lot more than just the basic sort of internet access part of the website hosting. So we don't have specific guidance on that in particular. That's just my educated guess as to how they might treat that going forward.
Well, perfect. Let's get into our next question. I think this is one of these that we can probably review. We may have mentioned, but this is always important. What documentation should I be compiling? Justin, I know you've gone over the forgiveness form. Do you want to help us answer, maybe review this question about the documentation people should be compiling?
Yeah, so this is one of the areas that the SBA did a great job of publishing, and it's on page 10 of the application. And so as we look at that, it kind of goes through each of the different areas on what you'd be wanting to compile or put together. So the first thing you need to be aware of is the biggest thing we're probably going to look at is bank statements, right? Those bank statements covering the entire covered period. And you want to make sure that as you're looking at your bank statements that your name is listed on your application matches the name that was listed on your bank account. You know, one of our duties as the bank is we looked at that on every application, and assuming we're 100% perfect, we got it right. But if you see any discrepancy on how your name is listed, other than something small as in, you know, a comma or a period, or, you know, a corp versus a corporation, I would look to your financial institution for advice on if they're going to require you to make any changes. You know, if you're a sole proprietorship and you filed underneath, you know, your LLC or vice versa, making sure that those names match the application you submitted is important. So it'll start with bank statements. The second thing that we'll ask for again is probably your 941 that's going to cover the entire second quarter, given that most applications will have the 8-week period in there. Some of that might bleed into the third quarter, which we look at as well. Same thing as part of your payroll, any state or local taxes that were paid. You know, a lot of the documentation that you provided to get your loan would be used again with more current information for the review. The next thing you're going to look at is if your bank statement just shows check numbers, for instance, let's say you process payroll manually and you write checks to them, or you cut them out of a QuickBooks or Quicken, any type of payroll provider or program that you can provide that would give employee names and dollar amounts would be an acceptable substitute. Or you may have to get down to the old-fashioned give a copy of a check if you're writing out hand checks. When it comes to utilities and other debts, we do have the verification that that debt was in place as of February 15th. So you could use that either with a note or an invoice or a copy of a statement that showed that initial date. And then you'll want to include statements all the way through the entire 8-week period, so you're covering everything from beginning to end. But this page does give a pretty strong all-inclusive requirement of what you're looking at. I think the bigger thing that you'll want to look at is more when it comes to this FTE calculation, because what you'll see here is this box here, when it talks about your employees, they're actually requiring you to do that more than once, right? You're going to have to do that for your calculation for February 15th. If you had any employees that you laid off between the February 15th and April 26th, it's going to ask you to calculate it again for that time period, and then again to look at it on June 30th. So the quicker that you can set up either an Excel worksheet, depending on the number of employees you have, or some other program that you can track your individual employees, their earnings both before the program started, during the program, and after, I think will set you up to be prepared when the opportunity comes for you to apply for forgiveness. Deborah, anything else you'd like to add or that I might have missed?
No, that was great. I did want to just mention, though, you know, in a couple of places in the guidance as well as in the application, they do reference the fact that the documentation that you'll be providing a lot of times is similar to the documentation you'll be reporting to the IRS and others. And again, reading between the tea leaves as a lawyer, you know, that raises a red flag to me to say, you know, whatever you're reporting to the IRS better be the same as what you're reporting to the PPP program, because my suspicion is that they're going to be building some kind of an interface program to be able to sort of correlate the data between the two. And that's really how they're going to identify red flag applications that might need to be reviewed. So it's possible that you might have to wait until the end of the quarter to be able to finish your quarterly payroll reports before you can submit your forgiveness application. And remember, you've got 6 months before you have to start making payments, and you've got 90 days from the end of your covered period before you have to submit that application. And you don't want to wait till the very end, but you do want to wait until you've had an opportunity to fill out the appropriate tax forms before you go through that forgiveness process, to make sure that the information that you're submitting to your bank for forgiveness is going to match the information that you're giving to the IRS, so that you don't end up creating a red flag for yourself later on down the road.
One of the best things a business can really do is, if you have a question about something, you're oftentimes better off to wait for the SBA guidance to come out, because oftentimes things are published a week or 2 or 3 down the road. So I know everybody was excited to apply for the loan and get funding quickly with the worry that will funds last. This forgiveness process is going to be much different, because you've got 6 months of deferred payments, which really gives you the opportunity to get all of your documentation in order, make sure that you've reviewed and verified everything, that you're confident in what you're providing. And then that gives your financial institution the opportunity to get it reviewed and pushed through the SBA. We are given 60 days from the time we get your forgiveness application to actually process that, work it through the SBA, and then credit your loan for those proceeds. So we will ask for a little more patience from businesses the second time around as we're working through those. What I highlighted here is one of the important things to keep in mind is, much like tax documents, they are asking businesses to retain all of these documents for 6 years, just in case the SBA does want to come back and audit. So it's definitely important to make sure you got your ducks in a row, that you reviewed everything, that you're confident in what you're providing. And just know that the intention of this program is really to continue to make payroll, to support businesses in this downturn. So, as long as what you're providing is within the intent of the guide, you're probably going to be pretty protecting yourself. You're going to be good shape.
This has been great advice. And I want to tell all of our folks watching the webinar right now, or maybe if you're watching even the tape version later, we were slated to go to just the top of the hour, but because we've been getting so many of your great questions, we've asked our great experts here to stay an extra 15 minutes. So we're going to be sticking around an extra 15 minutes to this webinar just to answer all these great questions coming in. We have access to experts like this. I can understand the demand. Let's get to our next question. Are taxes part of the incurred/deferred payroll expenses? Is the forgiven portion of PPP loan considered taxable income? Are the forgiven expenses deductible on a business income tax return? A lot of good questions there. Who wants first crack?
I'll start.
Go ahead, Justin.
The only piece that I've really seen thus far is, I believe that any part of the forgiveness is not considered income and not taxable. However, I do believe that one of the questions posted in the SBA FAQ does state that any expenses that are forgiven part of this are not eligible to be used as expenses for reducing income on your taxes. Deborah, would you agree with that?
Absolutely. It goes back to this whole double dipping concept, right? So if you are if you are getting this money and you're using it to pay certain expenses, you can't then turn around and deduct those same expenses on your federal income tax form. The other thing, and I think it was the first part of the question, Dominic, so I was reading, there was like 4 or 5 questions in there, but I think one of the first questions you might have asked had to do with whether or not you could use PPP funds to pay taxes. And you can use to pay state and local payroll taxes. You cannot use it to offset the employer's portion of federal payroll taxes. So they did make a distinction there with regard to what is an allowable expense for a payroll expense on the tax side. I think that was one of the questions. And then, to Justin's point with regard to deductibility, again, just kind of keep that overarching goal in mind that, this is not meant to be a windfall for anybody. So, so if it seems like you're double dipping, you need to take a second look and make sure you're asking your lawyers and your accountants whether or not that's appropriate.
And again, one of the best things you can do is if you're out on that Treasury website, look at those documents, and if you use the Control F, you can search for keywords like taxes, and that'll help you find the question that may give you the answer that you're looking for. So good way to leverage the resources that are out there. And oftentimes when we get those questions, that's the first thing I do is go out to the Treasury website, figure out which document might answer that, and see if I can pull up the answer to that question.
Both of you have really provided some great advice. Justin, any help navigating a government form, I think, is top shelf advice. So well done there. Let's get to our next question. Double dipping question again. Is there a conflict in applying for PPP forgiveness if I've received the EIDL $10,000 advance? Can I receive both? Now, Justin, I know we addressed this a little further back in the webinar, but maybe you and Deborah can both elaborate on this situation.
Yeah, so let's talk a little bit about what we call the EIDL loan, the EIDL. There's actually two components to that. The first one is the EIDL grant, and that is a grant that was given early on where people received funding that did not require loan documentation, does not require that to be repaid. That is not considered an EIDL loan. Okay, so if you applied for your PPP loan and you asked if you'd received an EIDL loan and you received the grant, the answer to that question would have been no, you did not receive a loan. So you do not have to report that when it comes to the PPP or the forgiveness. The second aspect of that is the EIDL loan. You will know you've received the EIDL loan because you'll actually get loan documents that you'll sign that will have repayment terms on those. We have found thus far very few businesses that have actually received the EIDL loan. The majority of businesses that we've seen to this point have received the EIDL grant, and therefore there's no conflict. If you're one of those few businesses that did receive an EIDL loan, you just cannot use the EIDL loan for the same purposes as the PPP loan. So given that the bulk of the PPP loan was for payroll, as well as mortgage interest and rent and utilities, if you're applying for the EIDL loan for a different business purpose, whether it's short-term, long-term working capital, or some other purpose, then you are allowed to receive both. Really the key there is what you put as the loan purpose when you applied for the loan and then what you actually received. Deborah, anything you would add?
Well, and also, again, very nuanced, very specific to certain businesses, but you did have the opportunity at the time you applied for your PPP loan, if you already had an EIDL loan, to actually roll that EIDL loan into your PPP loan, essentially refinancing the EIDL loan into your PPP under certain circumstances. So it's possible that your application may have already included your EIDL loan. You'll definitely want to make sure that you're looking back at your original application and talking to your bank about whether or not that was the case, so that you know how to treat those and make sure that you're not, again, double dipping with regard to reporting the same expenses for both loans.
Perfect. Let's get to our next question. Who determines the forgiveness, your bank or the SBA?
Well, there's actually a third party that's involved in that, and that's the business.
Yes.
And so the way the program is written, it's actually the business that determines the forgiveness. The bank's responsibility in it is just to make sure that the documentation that's required has been collected and to do a very high-level review to make sure it looks accurate. We're not going to comb through document by document, check by check. We're really just going to do a high-level review to make sure that what was provided is what was supposed to be provided. And then ultimately, at the end of the day, we're reporting some high-level information to the SBA, and most of it's digital. So unless something that we provide digitally is incorrect, I'll give you a couple examples on the application side. If there was a loan amount calculation that was greater than 2.5 times payroll, that was rejected by SBA. If there was an invalid NAICS code, that was rejected by SBA. Those are the types of errors that they're finding when we submit applications. But all in all, it's really up to the business owner to determine what they're eligible for forgiveness and then provide the documentation to prove each dollar of how they've spent the money.
Deborah, anything to add? Looks like a pretty straightforward.
Very well said.
Well, that's been the theme so far. Very well said indeed from both of you. Thank you. Next question. Are there any specific rules for nonprofits applying for PPP forgiveness that we need to keep in mind?
Deborah, you want to start with that one?
You know, I was just going to say, I do not recall any specific guidance or any specific requirements in the application that are different for nonprofits than for-profit businesses specifically that I am aware of.
Yeah, the only thing that I would add is classification of nonprofit is something to be aware of. So 501c3s were eligible, 501c6s were not. There was some additional guidance that was posted out here when it comes to nonprofits that do receive government assistance or financing, specifically hospitals. A lot of times they get some government subsidies as part of their financing. There was a percentage, and if I'm thinking off the top of my head, I want to say it was 50%. As long as less than 50% came directly from the government, they were eligible for the program. But again, that's one of those places where if you come out here to the Treasury website and you look at that guidance that's provided, it will help answer that question. Outside of that, the documentation for a nonprofit, the calculation of payroll, the calculation of forgiveness, all of that would apply just the same. We actually saw several religious organizations, churches that are also eligible for this program, which historically have not been eligible underneath SBA. So it really is an overwhelming opportunity for businesses that historically could not get financing under an SBA program to really evaluate if this program does fit their needs and if they qualify.
Well, great. And as we approach the top of the hour, I just want to remind everybody on the webinar watching that we're going to go an extra 15 minutes. We've had so many great questions from all of you. We want to go as long as possible, and we've asked our esteemed panelists here if they can spend an extra 15 minutes with all of us, and they have graciously agreed. So we're excited about that. So we're going to keep on going through these questions, get through as many as we can until 1:15. Small business, S-Corp, only employee is the owner. How do we handle or account for payroll expenses versus draws taken? Who wants this one?
Yeah, so I'm going to open up a document that's here, and it's for borrowers on how to calculate loan amounts. We've used this resource with just about every borrower that we've encompassed to help look for guidance. And this does kind of talk about specifically when it comes to S-Corps and C-Corps. And the answer to that question is that S-Corps and C-Corps don't allow K-1 draws or distributions to be included as part of the payroll. The only type of entity that allows for that is a partnership. And so the way this thing was structured is your sole proprietors, your independent contractors, your partnerships, where they believe those to be more closely held entities with one or two parties in control, were given the latitude to include that owner compensation if reported correctly. Unfortunately, the way this was written, anything that's in an S-Corp or a C-Corp did not allow for that unless the owner was paying themselves as if they were a W-2 employee of the company. And so if you come out here to the questions, it's right here. It's question number 5 on this document is, how is the loan amount calculated for an S-Corp or a C-Corp? And again, it's just pulling in those documents, either your 940, 941, or your W-3 as reported on payroll for the eligibility of the loan. Deborah, anything else that you would add on that?
I was just looking at the PPP Schedule A worksheet because there is a, or actually, I think, hold on. It was in the instructions for the Schedule A worksheet that talks about, owner compensation. So there is a section in there that talks about owner compensation and including owner compensation and the calculation. The one thing again I would just be cognizant of is that $100,000 limit, and that's prorated. So you can't go over that as well. And I would expect that we're going to get some more guidance on that issue. Again, that was one of the things that came out sort of late in the process with regard on the application side. So my guess is if it's not in this initial sort of round of guidance that we get with regard to this application, that we're going to get some additional guidance, because as you might recall, if you know, you're involved in an entity that is a sole proprietorship, or that's a single member LLC where you report under a Schedule C. It was all based on the amount of your loan was based on your net profit. You can't calculate net profit till the end of the year. So there needs to be some additional way of calculating that during this interim period of time. And we just don't have guidance on that yet. So we don't really know specifically how they're going to treat that for those kinds of businesses where the PPP loan was based on a net profit calculation as opposed to based on a W-2 wage calculation. And my expectation is we'll have some more guidance on that in the weeks to come.
All right, like I said before, we're going to keep trucking for another 15 minutes. Let's keep going. Next question: is it possible to prepay payroll so that it is included in the PPP 8-week period?
Deborah, do you want to take that one?
I don't feel comfortable answering that question specifically, and I'll tell you why. The language in the application is very black and white. If you paid the money during the covered period, you can include it. However, the overriding goal of this whole program is to make sure that, you know, you have the same number of employees, that you've got, you know, that the employees are making the same amount of money, so that those funds can be used to essentially continue business operations during this covered period. It would not surprise me if additional guidance comes out in the future to say that, you know, you can't essentially prepay for work to be performed in the future. It doesn't specifically say that anywhere. It just wouldn't surprise me if that is ultimately what they determine. Again, to be conservative, what I tell my clients is just stick with what you know. Do what you've been doing, continue to pay people the way you've been paying them. If you've got some deferred compensation for folks that worked that hadn't gotten paid, and you pay that during the covered period, it's clear that that is included. However, prepaying for services to be rendered at some point in time in the future, that is, again, to me, sort of outside the box. And I don't have specific guidance on it, so I wouldn't necessarily recommend it, but I don't have anything that says you can't do it at this point.
Yeah, if you look at the definition that's on the application as it stands today, all that they've told us today is that payroll costs are considered paid on the day that paychecks are distributed or the borrower originates an ACH. Payroll costs are considered incurred on the day of the employee's pay is earned. So I think that's a key statement there, is what day did the employee earn their pay? And if that is inside your covered period, you're probably good to include it. If the date they earn the pay is outside the covered area, it's probably likely not that you should include it.
Makes sense. Justin, reminds me of what you brought up as banks look at decisions before. Can we and should we? But really well pointed out by both of you. Let's get to our next question. I think we've talked about this one, but this would be good to remind everybody. Are contract workers included in the FTE calculation? Justin?
So that is a very good question that we saw created some challenges for many businesses applying for the program, and I know is going to come up in forgiveness. 1099 workers are not eligible to be included underneath the employer's application. Any worker who is a 1099 employee can apply on their own individually using that 1099 and a Schedule C for their benefit. So I know that what's going to come up when the forgiveness applications come in is I know some businesses listed their total FTE count on their application of 1099 and W-2 workers. And I know that when the forgiveness application comes in, that more businesses will have a better understanding of the rules and will probably not include those. As part of your forgiveness application, you're going to include both calculations. You're going to tell us what your total FTE headcount was on February 15th, and what it was again on June 30th. So that really will give every business the opportunity to report their headcount correctly and accurately as part of the forgiveness application. Deborah, anything else you'd add to that?
Nope, I think that's exactly right.
Well, perfect. Let's keep on trucking. If we have employees who have refused to come back to work, i.e. not comfortable leaving home, can we pay salaries to owners who are working to make up the lost hours of that employee? Interesting question. Who wants the first crack at this one?
I'll start with that. So I think there's two things that really go into this question. The first one is it pertains to the overall headcount, the FTE. And so under this safe harbor exemption, any employee who is laid off and doesn't want to come back or leaves on their own will give the business owner that safe harbor protection, so they don't have to necessarily fill that headcount immediately. So I think they're protected from that perspective. The second question then comes when it comes down to calculating the payroll. We don't have anything that specifically addresses this, but I do think that it is acceptable for a business if they have to pay an employee, whether it's an owner or another employee of the business, more money to have them work additional hours or take on additional responsibility. That would fit the overall nature of what the act is allowing. And so I think if they can document that and include that, and I would put a note in their internal file of where that payroll calculation came from and why the increase. The thing they need to be cognizant about is not hitting that ceiling of that $15,385 per worker. But from what I see, that would probably be an acceptable practice, given that they can justify the reason behind it, especially if anybody asks them questions down the road. Deborah, would you add anything to that?
Yeah, no, I would absolutely agree. I think the only limitation on that is the $100,000 limit. The other thing to just keep in mind is you can pay people even though they're not working. So if you, for whatever reason, haven't decided to open up your business, that does not mean that you can't pay those employees. So if you anticipate that those folks will come back at some point in time in the future, you know, the whole point of this program is to get paychecks to individuals. So just because they're not physically in your workplace or just because they're not actually working, you can still keep them on your payroll. You can still pay them. If that fits within your business model, they don't have to actually be working in order to qualify for payroll.
Well, we're headed into our last two questions. This next one's pretty creative, so let's see what we can do here. Our business is unique with a payroll that fluctuates significantly throughout the year. We are not a seasonal business. However, we have kept all FTEs employed for this time period. Because per formula for calculating average monthly payroll, we qualified for a loan, which is almost double what was needed for payroll at this time. We won't spend 75% of the loan we receive, even though 100% of what we will spend goes to payroll. Will we qualify for forgiveness? What do you all think?
Yeah, I think we're going to have several businesses that fall into this bucket that, based on the calculation of what they had on an average of last year, that it may be more than what they're spending today. Here's the important thing for all businesses to know. You're going to submit your forgiveness. Whatever that dollar amount is, at least 75% must be spent on payroll. The other 25% can be spent on other categories. So if we take an example here, if this business received a $100,000 loan and its total payroll that they paid during its 8-week covered period was $60,000. That means they can spend $20,000 on non-payroll expenses, right? So that means their forgiveness is $80,000 total, 75% of that being the $60,000 on payroll. That means there's $20,000 that would not be forgiven. The business now has a choice. They can repay that $20,000 back at any point in time that they want. They can pay it back immediately. They can pay it back today if they know they're not going to need it. They can use that as working capital for any other SBA approved purpose. Maybe they want to use it for payroll for 3 or 4 months beyond that time period and pay it back over the 18-month period once their loan kicks in. That's for a business to decide how they want to use it. So while it may not be forgiven, it is funds that they can choose how they use them when they want to pay it back.
Deborah, anything to add?
Yeah, no, that's exactly right. I think people get hung up on this idea of, hey, if it's not forgiven, then it's bad or it's wrong. And really it's not. It's just money that you'll have to end up paying back at some point in time. But if you can use the money for other allowable expenses, for rents, for utilities, for additional payroll after your covered period, you're fine. And again, it's a 1% loan. It's good capital for your business. So just because it's not forgiven doesn't mean it's bad or it's wrong.
Yeah, and one of the things that may really come up and help this business, which is similar to what we're seeing for restaurants, is Deborah touched at the beginning of this on the HERO Act that they're talking about that may extend the period by which we can make payroll. So if something like that passed and modified the act and what businesses could do, that may be a big benefit to a business just like this. And that's the reason they're having those discussions.
Well, perfect. Let's get to our last question. Can you review date deadlines? June 30th is for safe harbor only, correct?
So let's talk about a couple dates that are posted in the application that people need to be aware of. So the first date they need to know is what is the date they received the first dollar from their loan. And their loan should have been fully dispersed in one day, but as some businesses have revised their loan amount based on new guidance that's come out, they may have received funds on more than one date. The important date to know is what was the first date they received funds. That's the date by which they start their covered period, or they can use this alternate covered period here and adjust that by a couple days to meet the beginning of a payroll starting period. So if you got your initial funding on a Wednesday, but your normal payroll period starts on a Sunday, you could advance that date forward 5 days and start your payroll date on a Sunday so it corresponds with what you're doing. So that's the first thing. The second date you need to acknowledge is what is 8 weeks from that date that you're choosing as your covered period. Whether it's your funding date or your alternate date, you need to know what that 8-week period date is, because those are the two dates that are going to tell them what's included in their loan forgiveness for their payroll or other expenses. The next date they need to look at then is June 30th. June 30th is the date they're going to look at to calculate their FTE as compared to February 15th FTE. So that will then satisfy the headcount criteria. The next thing they need to look at is whatever date is 90 days from that 8-week end date, because they've got 90 days from the end of their covered period to file their loan forgiveness application. If they keep an eye on those dates, those are probably the most important things that they would want to know for today, and that would help them dictate what documentation they need to prepare and what dates they need to provide. Deborah, did I miss any dates?
Nope, I think you covered them all.
Well, this has been fantastic. I want to offer our panelists an opportunity for any final comments, any things that you would leave with all of our webinar viewers. Now we've gone through a lot of great questions for them. Deborah, let me start with you. Any final comments for our attendees?
The only thing I would add is that there is still $150 billion left to be allocated under the PPP program. So if you are a business or if you're an organization that supports small businesses, and I know a lot of people got frustrated through this initial program. Oh, I'm never going to get it. Why do I bother? Oh, it's too complicated. I can't understand it. There is still money available. So do encourage your folks to continue to apply for loans if they have not yet received one, because there is still $150 billion left to give out. So we might as well give it out when we can.
That's great advice. Justin, any last comments you would have for our attendees?
We just appreciate everybody's willingness to attend, especially supporting great organizations. If you have questions, reach out to your resources. It could be your financial institution. Your CPA is probably going to be a really big resource during this time, or any legal counsel that you have. All questions are good questions, and the best thing you can do as a business owner is really understand the program so that you know what you can do and get the most out of it. At the end of the day, we know that this is a stressful time for everybody. It's stressful for us as a financial institution working with businesses because we know the importance that you bring to our economy. We know the challenges that you face trying to get your doors open, And so anything that we can do to help or support you, whether it's part of this program or outside this program, please, reach out and, let's work together.
Well, I first of all want to thank our esteemed panelists, Deborah Bayles, partner at Stinson, and Justin Simpson with Vectra Bank, Colorado. Both of you just did a marvelous job. Thank you so much for the counsel that you've been able to provide to all of our great attendees. I want to thank everyone who has, whether it's a live attendee of the webinar or watched it later, thank you for tuning in. This has been a great opportunity to really share a lot of needed, important information. It's a very fluid situation out there right now. We're happy to be a part of this. If you registered for this webinar, any links mentioned will be emailed to you in a follow-up email. Also, if you missed any portion of this webinar, if you checked it out late, you can find the recording on coloradofilm.org/webinar-series by the end of the day tomorrow. And please stay tuned for more informational webinars from the Colorado Office of Film, Television, and Media, the SCFD, and the collaborative of the SCFD, and the Colorado Business for the Arts Association, and of course, Colorado Creative Industries. I just want to say on behalf of everybody here, it's been an absolute pleasure to moderate this panel discussion. Thank you so much for tuning in. And on behalf of everybody here at the organizations listed, I'm Dominic Dezzutti. Thank you so much for tuning in. Have a good day.
Thank you, Dominic. And just one last thing for the audience. One tool that we did receive today was a workbook for calculating loan forgiveness, courtesy of the AICPA, a great organization. We will be sending that out to everybody, which will help you in the calculation of your loan forgiveness. So you can play with it, work with it, and hopefully it'll be a resource that can help you.
We're a great way to end the webinar. Thank you so much, Justin, to everybody, Deborah, everybody who's been involved with this. And thank you so much for tuning in to this webinar. Please tune into future programs right here. Thank you.